Good morning, everyone, and welcome to the European crossover webinar. And we're seeing a relatively quiet start to the week. Euro is on the bid, but one of the things you can make a note of, we've been referencing for well over a week. We're going into reference that visually. We've been talking about keeping an eye open for that. And you can see here the bunds are back under pressure again. So that's going to keep the bid up in the euro. We had talked about the bunds, was it nearly 2 weeks ago, and the potential for this to break much lower, and that this will provide a bid for the euro. So my point just being is that the euro is on the bid right now. I mean, we didn't even pull back very much yesterday, but obviously there's something you kind of hang your hat on right now, is this these bunds challenging the lows again. And wow, what a big fall. I mean, in a larger context, and you think, well, it's not even that much of a fall, but on a very short-term basis, boy, we really come undone, I guess. I mean, the euro's really responded in the sense of where the bunds are at this point. Let's go on and pull back here. Crude kind of creeping a little bit higher. I did notice that Friday, when we took that quick dip, that we actually saw some pretty good volume come in as it started to pop up. So it looked like we're kind of coming into a little bit of a low here. We'll take a quick look on the half-hour chart. When we took this slide down here in the crude oil, we had good resistance there, and I'd taken some scalps against this, but not much. And then we finally broke lower. We talked about and posted several charts about this being a good area here. There was a lot of confluence, but nothing was really happening. Finally, we started to break low, and we broke again. But on this break lower, we had some decent volume. On this move back up in here, we had some real strong volume to the upside. So I thought, okay, we'll probably start the week off being supportive. We actually came in and took a bit of a dip, but you can see it held here, and then we've gone and jumped up. So I think we're going to work higher in crude here. Just a thought here. Also, we're seeing the cable a little bit stronger here. I actually happen to have this on the 5-minute. Boy, we are still pressing up here. So let's go into that, and then we'll cover the news. I mean, it's very, very quiet. And then also, not very much on the economic data. We did have some German data come out. Bear with me one moment. Producer prices came in a couple hours ago. We do have UK data at the bottom of the hour. Let's see. And that's it. You mean that's going to be it? So nothing here in the States. So we'll see how today plays out. Bear with me. And you can see here cable right up against this pivot, which it came up on Friday. And look how important this 2980 is. I actually had that marked as a pivot. Well, we were way down on here. Wasn't even looking at it, but as I pulled the charts back to update, I saw, oh wow, there's that big pivot we had from before. And we've got the 78% coming in at 30.78. So almost seems like they would want to pop those stops. So we've got 30.78, and then also coming in confluence right here is 30.48. So I would think they'd want to pop those stops. Anybody that's short or hung on saying, oh, you know what, I don't want to be in if we get above 30. I'll put my stops at 29.92. Well, I'm going to put my stops at 30.15. I'll put my stops at about 30.28 in case it overshoots. So I'm saying is you've got all these I don't say reasons, but I think that the market would want to tag 30. It's just a matter of how much will pop. And my thinking is good chance. We know how much cable lives at 78%. I always like to joke from the old Wall Street movie, Blue Horseshoe loves Anacott Steel. Well, we know cable or the sterling pairs really love the 78%. Peso continues to remain under trouble. We talked about that rally for over a week. And I mean, I hadn't done anything in it, but I mean, I was, from a technical standpoint, I was really dogging this thing like nobody's business prior. I mean, it looked like we had a potential little inverted head and shoulders on Friday, but we had made the case earlier in the week that if we got a daily close below 1923, it would open the door for us to go to 1908. Because our support had been 1923. Actually, was surprised. I thought we'd get a bounce as we moved to 1923, and we said a little overshoot at 1916. We made it down there, but we said if we get a daily close below that, it opens the door for us to move to 1908. We got successive daily closes. It looked like they may try and make a hold on Friday, but nope, it just continued. So the support comes in at 1908, but I've already gone into it, a lot of detail about, the technical picture and how this really disappointed. And once it got under 1944, basically it was over and done with. And then that was going to allow the challenge for 1923-6, the breakout. Although I thought we would have seen a bounce from that area, and we've just continued to push lower. But we'll see where things, once we get into the analysis. Aussie dollars continue to push a little bit higher. Okie dokie. It did close above an area, although it wasn't like a huge big turnaround, but it did close above resistance. You can see that here. And we got above 68.31 also. We finally broke above this pink line here, which is an intraday resistance, which is 68.09, but with key was 68.31. This is the big one number up here, but we shall see how things translate. With that, let's just go on and move into the news, and especially on a very quiet session. So the never-ending story. Yeah, you got that right. It's never ending till it's over. Well, actually, you know what? The phrase, or whatever you want to call it, the saying called it ain't over till the fat lady sings, actually comes from a San Antonio sports columnist who coined that phrase. It ain't over till the fat lady sings. It actually was a sports columnist named Dan Cook in San Antonio who actually penned that phrase. It ain't over till the fat lady sings, referencing the opera. But it's never over till it's over, it's never over till it's over, which is Yogi Berra, who did it ain't over till it's over, who coined that phrase, Yogi Berra with the New York Yankees. But the more popular one, which is it ain't over till the fat lady sings. What was billed as yet another make or break weekend in the seemingly endless Brexit saga has once again failed to deliver. Kicking any parliamentary vote on the latest deal thrashed out between London and Brussels from Saturday to Monday, assuming the government is even allowed to ask the question of lawmakers for a second time. As a result, an amendment passed on Saturday. The UK government is now bound to extend the Brexit date beyond October 31st if the legislation required to ensure Brexit is not passed by then. UK Prime Minister Boris Johnson was forced into a U-turn by sending a letter to the European Union on Saturday requesting a delay until January. Oh my goodness. The EU is said to be considering the delay pending the outcome of any further attempt by Johnson to pass the latest deal to Parliament as soon as Monday. The political maneuvering puts the timing of the whole process in question yet again. Even though markets seem assured that the parliamentary chicanery now significantly reduces a no-deal Brexit crash, considered by many to be the worst-case scenario for the UK economy, Goldman Sachs said it sees the chance of a no deal reduced to 5% from 10% previously. The pound, which had been on Friday's close, risen as much as 6.5% over the previous 7 trading days to a 5-month high, just shy of 130, has recoiled 0.5% from those peaks, but continued to hold 129. First thing in London. With traders seemingly comfortable that either a deal or delay is now in the offing, the latest data on speculative currency positions showed a further reduction in the net sterling shorts last weekend, underscoring the rally. The timetable for Monday's vote remains uncertain. Parliament Speaker, the first must rule on whether the question can be asked again. Government ministers claims if they get the votes to pass, the independent observers say it will be tight either way. The FTSE index are set to open flat. With one eye on the UK saga, world stock markets were firmer. The first thing, positive signals on Friday from Chinese Vice Premier Liu He on the need for Washington and Beijing to solve the differences over trade health sentiment in Asia. Hong Kong stocks were buoyed by the legislation along the mainland. Chinese purchase of the dual listed shares in Hong Kong. The Hang Seng was up 0.1%. Japan's Nikkei rose 0.25% despite news of a big drop in September Japanese exports, and Seoul's Kospi was up 0.2%. In emerging markets, a sign of progress in U.S. China trade talks outshine some dismal Asian data to see stocks gain developing world currencies to an 80-day high. Sterling slips from a 5-month high as Brexit delays jitters. Well, actually, we're right on our highs right now. Sterling fell over 0.5% on the dollar on Monday, slipping from a 5-month high that move derailed Johnson's plan for decision on his withdrawal deal, but the pound held the bulk of its recent rally. And let's go move on down so we don't go over news again. But Johnson added another note stating he was opposed to an extension, and the British government, Mr. Michael Gove, said on Sunday that the Brexit will happen by October 31st as the government seeks to get the Brexit bill through Parliament. We're on our highs. The weekend events, if anything, have further reduced the risk of a disorderly exit, said Adam Cole, chief currency strategist in London. If there's a knee-jerk negative reaction in the pound as we emerge from the weekend with a greater overhang of uncertainty, then hope that some of the long positions are unwound, it should be faded soon. While weary of the Brexit process, EU leaders are keen to avoid a disorderly exit and are unlikely to reject the request. Goldman Sachs said on Sunday it lowered the probability to 5%. Implied volatility were mostly little changed on Monday. Let's see. Apart from Brexit, traders are looking at central banks' policy decisions. A big week for central banks kicks off on Thursday with the ECB. The last one for President Mario Draghi with a focus on the U.S. Federal Reserve's policy meeting on October 29th and 30th. And lastly, we'll just go and hit up on the Aussie because, like I said, we are making new highs on the Aussie as we speak. Aussie and Kiwi dollars hold gains. The Aussie and New Zealand dollars held near 5-week highs on Monday as their U.S. counterparts struggled with expectations of an impending rate cut, while policy in Australia is set to be on hold for at least another month. Investors are wagering heavily the U.S. Federal Reserve will cut rates again at its October 30th policy meeting. In contrast, the market has scaled back its bets for an easing from the RBA. This might be a small move, but for investors who have been sitting on the fence over the RBA's decision, it was viewed as quite significant, said Sean Callow, senior forex strategist at Westpac. Westpac forecasts that the RBA will stay on hold for the next 3 months before cutting rates to 0.5% in February. The RBNZ may not wait so long, with the markets pricing in around 87% chance of a quarter point cut to 75%. There's little way of economic data due this week in Australia or New Zealand to change the policy outlook. Figures out on Monday suggest the RBA's 3 easings this year were at least working to revive the housing market, with prices rising strongly in Sydney and Melbourne. Didn't want to go and look over the data, and it's easier for me just to look at the FX calendar here, or daily FX, than to try and pull it all from the one on Reuters at the time for right now. So when we look at it, we're looking over the next 7 days. Obviously, today's like exceptionally quiet. You can see here. As we move to the States, there's nothing there. Haldane speaks in Frankfurt. On tomorrow, we do have ECB lending survey. Let's take a look here. A little bit of UK data. Let's see. Tomorrow, we do get Canadian retail sales at 8:30 Eastern. As you can see here, I'm on Central Standard Time, so ratcheted up 1 hour for Eastern Time. existing home sales. So we don't get any real good data or significant data here in the States until tomorrow, whether it be it US or Canadian data. Wednesday. House price index at 9 a.m. Eastern, Eurozone confidence at 10 a.m. Eastern. Then, of course, Australian PMI later that evening or next day, however you want to look at it. Coming to Thursday, we do get, this may be key, it's saying high, UK sovereign debt being rated by S&P. The market services PMI. Let's see here. Of course, we get ECB rate decision. Durable goods here in the States, along with jobless claims, home sales, and then we roll into Friday. There we go. So let's go and move into the analysis. Well, Guppy's making a push. We're above 141 at the moment. On our highs right now here with the euro. So it says the euro settled the week above 1150, allowing for a challenge to 1213 with immediate resistance at 1180. You can see real at 1209 we have the 61%, and that's confluencing with this resistance at 1213 right here. So you can see right here there's that area that we're looking for potentially for the market to go in and challenge to. We'll just go and move this up here. There we go. So potentially we can make a move to this 1213. Right now we've got some immediate resistance coming in at 1180. Really, actually, you look on a daily, it comes in around 1198 at 12. Well, it looks like they want to make that run there, but that's 50 pips away. But this is real key right here. You can see all these touches coming across the daily right there. And I had 1180 on the 2 hour. That is some good resistance coming across here. Let's just go with 1198. And then for support, well, we've got this 1113. If we do go on and do that slide, let's go and move into the 2 hour. This is where we're getting the 1180. I'll show you here. You can see right there. You see there? A lot of good touches coming in there. Well, I tell you what, we're going to split the difference, and we're going to say then we'll split the difference. Let's call 1191 on the upside. On the downside, it's going to be 1121. $11.92. And the boons continue to remain under pressure here. Let's go and move into the cable. This cable finished the week at the 2980 pivot. All the rage will be the open on the Sunday evening. Resistance is 3050, confluence with 3078, the 78%. The downside is what most traders are focused on in light of the news. Immediate support is 2840, followed by 2743 with an overshoot at 2668. So we're going to go 2840. And we said the resistance was 3050. We'll go with that 3050. It's actually 3048, but let's go here. There you go, like this. Because we got that little band here between 48 and then tagging that 78%. So, and I think they'll want to clip those highs above, trigger those stops above 30. It's just a matter of how far they'll go. Let's go to the Aussie. The Aussie closed the week on its highs, taking out 68.31, albeit without much fanfare. Immediate resistance is 68.75. Well, what do you know? We're right there. You can see it right there coming across the level. A break above would allow a move to 69.44. Support comes in at 68.05. So it's 68.75. We had 68.81 before. We said 75. I'm going to stick to that. Although there's probably on 81, maybe on a 2-hour chart. Support, we said 68.05. Let's go and come in here, which is that area for it to break out, which is now resistant. This market still remains bearish. Let's go and move into the Kiwi. Kiwi broke above resistance level 63.58, falling short of major level 63.89. You can see we're above it now. Kiwi needs to break above the 64.36 on a closing basis to generate upside momentum. So we're going to have our resistance at 64.36. You can see here. There's some minor resistance coming right there at 64.24. We'll go with the 64. We'll stick with the 64.36 because if they can get above that, that's what's going to be huge. And that, though we already got that in place. And support now becomes 63.26. The dollar peso, after successive closes below the breakout pivot, 1923.6, is on board for a move to the secondary support, which is 1908, with additional support at 1902. Resistance remains the breakout pivot, followed by 1932. So we're looking at 1908 with an overshoot to 1902. Not an overshoot, but that's our secondary support. So it's going to be 1908. Right there. And the potential for a move to 02. That'll be it's actually a little bit of a stretch here if we got to 02. Wow, cable above 130 right now, folks. Cable just tagging the stops above 130. And here, 1923. Yep, we're just barely above this. Not doing too much, so we just barely tagged above it. Maybe got a 4 pips above it, and we're kind of like, they're just gently taking those stops. I'm surprised we're not working a little bit higher here. Take a look at that. See right there? And this is 3048, and then our actually 3050, 3050 with 3078. Let's mark this up. I actually should update that to correct it. It is 3050. Surprised we didn't at least take it up to close to 20, but let's go and move into the dollar Canadian. So it says a dollar CAD close a week on pace for a date with 31 even. Confluence with trendline support. The market is expected to probe support at the demand level of 3043, resistance is 3180. So you can see here, we're looking at 31, but there is a support level right coming in right there, which is 3090. So we'll go and list that as our bias chart support for today. Potentially, we're looking for a move down to 3042, but 3043 that is. But for today, it's 3090. And resistance. Let's take a look at the 2-hour chart. Okay, we're at 3011 now on the cable. It's going to be 3167 here on the dollar CAD. We're at 3008 right now, so we're above this 130 level on the cable. And let's go move into the dollar yen. The dollar yen came off the highs on Friday by 50 pips as SPOO stalled at 3,000. Support to start the week is 0807 with additional at 778. Resistance is 875. So let's go and put our resistance for 875 here on the dollar yen. Let's see. 875, and we already mentioned the support for 807. For today, we're going to have these touches coming right across there, and that's going to come in right there at 8. It's just called 816. Mm-hmm. And let's go move into the dollar index. So it says the dollar index had consecutive closes below 97.89. The weekly, including the weekly, suggesting a top may be in place, rallies to 97.89 are to be sold, and only a weekly close above would neutralize the bearish outlook. And the reason I put the neutralize in parentheses or in quotation marks, I mean to say, is because it wouldn't make it bullish. It would just simply neutralize the bearish outlook for now if we got a weekly close above 97.89. Immediate resistance is 97.62 with support at 97.14, followed by trendline support at 97 even. So we'll go with, obviously they want to press it a little bit lower, so let's go with 97 on our downside. And on the upside, 97.62. But that's for today's bias chart resistance, but rallies that would be sold up to this 97.89. And with that, we'll go into the cross rates. Yeah, we just saw crude pop up right now. Not a whole lot, but we took a dip to 70, and now we've turned it and made a jump up here to 92. On the QEN closed the week above 69 even, but short to key resistance is for freshman put in, but falling short to key resistance was 69.44. You can see it right there. The pair will require two consecutive closes above that key resistance to generate more than just mild short covering. Support is 68.70. So we're just above that. And this is key for them to get above that. They need two consecutive closes above that. We'll just put it here at 69.75. And you can see support 68.70. Obviously still bearish. Aussie still bearish. Kiwi still bearish. Things are turning around, but still bearish. Dollar CAD now has flipped to bearish. Met peso definitely bearish. Dollar index is now flipped to bearish. Dollar yen is just still remains bearish overall. So let's go and move into the euro yen. Euro yen finished the week with stout gains. Resistance comes in at 21.72, which is a 50%. You can see it right there of the move 1591 to 27.52. So it's going to be 21.72. And support comes in at 2031. Still quite a ways off. Let's go and take a look here on the 2-hour chart. Well, you can see there 2070, 2070. Let's go into the euro odd. Euro odd is stalled just below major level 63.41 with upside moves thwarted. A dip to support comes in at 62.39. We're just barely above that. We almost tagged the 62.39, followed by 61.76. So it's going to be 62.39 on the downside. We just about tagged it. And on the upside, let's go in and take a look. $63.05. We'll give a little bit extra and we'll go 63.13. And let's go into the Euro Kiwi. Euro Kiwi has unceremoniously slid back after a breakout, trapping fresh bulls. Support is the apex, which is 74.23. I think we just about tagged that too. 74.25. Okay. So I have the apex of 74.23. And resistance is going to come in right there, 75.04. And let's go move into the guppy. The guppy appears on a mission. Thursday's session was a medium-legged doji, suggesting the risk of a short-term top. You can see here this medium-legged doji I'm pointing out right there. You see that? Right after almost what might have been considered a hanging man, get a medium-legged doji. Kind of curious how far they can push beyond here. Guppy appears on a mission. Thursday's session was a medium-legged doji, suggesting the risk of a short-term top. Upside resistance is 41.82. You can see that level right there, followed by 42.56. Support is major level 39.95, followed by 39.03. So we're going to go with 39.95, and you can see this key major level here. Let's pull this back. You can see the significance of 39.95, and maybe we can make that run up here to 41.82. So bear with me. They can try and take this out by a little bit more, but well, we're holding up pretty well. We haven't even taken out the highs, unlike cable, which has taken out the highs. Let's go into sterling versus yuan. Sterling odd challenged major weekly level of 90.58 before paring back 150 pips. Immediate resistance is 89.70, followed by 90.58. So we're going to go with 89.70. We haven't even come close to this compared to, as I said, like the cable. So let's go with 89.70, which is a key thing, really, if you think about here with the cable, because some of these other cross rates, I mean, you know, or with sterling, kind of give you an idea of how maybe if there's some real follow through on this. So we've got 89.70 here, and support, it's going to be 87.57. Still a ways off, but 87.57. Obviously, we're dealing with a pretty volatile situation. We were looking for a dip. If you saw in the charts on Friday, I was looking for a dip to 29.78 in the SPOOs, and we did get that dip. We actually came down to 29.73. I was looking for a dip. We're trading like around 29.94, I think, whatever, or 29.95. We did get that dip to 29.78. We're kind of still poking up here above here with 3,000. Gold's just kind of hanging around here in this 2-hour chart. I did post this there in the room. You can see here, and the significance on the XEU of this 1495. We can still break a little bit lower, but we sure certainly aren't hanging around here. And the Boons basically challenging the lows here on the Boons, which is providing actually new lows here in the Boons, which is this is some key. We've already been broken below here. This is very, very good resistance here. I mean, support. Look at this coming across. We're right there. Right there. It's going to be interesting to see if we can hold that right there. That's a good little demand area. I mean, we've overshot, but let's see what we finish at the end of the day. This will be key. See right there? But this whole area, all in here, we'll see how much further they can overshoot, but it's a good little area. Hang on. Maybe we'll see the market come back in a little bit. You see right in here, this is a good little area. Trying to find my little, which we'll call, can't think of the name of it. There we go. I'll clean it up because I don't like that dark color. I want it a little bit lighter. But you can see they're into a good little area here. Keep an eye on this. Crude, I think we can still move a little bit higher here. after the good strong volume we saw as the market tried to recover on Friday. But that's all we have for here. Thanks for joining us here on the European crossover webinar. We'll see you in the FX Daily Roundup.